Hello, namaskar, viewers. I am Sanjeev Pandya, welcoming you to this week's episode of the Tax Talk with AJ, right here on ITV Gold. The show is brought to you by Sai CPS Services, a fully professional accounting firm located in the state of New Jersey. Multiple locations, so they can assist you with your personal and corporate tax matters. Even if you're in the USA, anywhere else, they can be reached at 201-888-8900. That's a 201-888-8900. Visit their website, scipsservices.com. For any tax matter, personal, corporate, or even IRS tax audit, and if you are in a small to mid-sized business, they can help you with virtual CEO, CFO, and the payroll assistant and bookkeeping services. That's what Sai CPS Services is all about. They believe in two things: to do the books right, and when you do the books right, pay your taxes right, and whatever the deduction you are entitled to, you must get. And that's why Sai CPS Services has been helping hundreds of thousands of clients every year. So do reach out to them. 908-888-8900. That's a 908-888-8900. Visit scicpsservices.com. So once again, for any tax related matters, remember Sai CPS Services, they have been helping hundreds of thousands of clients over the years, and they can assist you. All you need to do is give them a call at 908-888-8900 or visit scicpsservices.com. With that note, I'd like to welcome Mr. AJ Kumar, CPA, CVA, and MBA with Sai CPS Services with over 25 years of experience. Every week he joins us, guides us, informs us all the taxes related matters. AJ, thank you so very much for your time. Thank you for joining us once again.
Absolutely, Sanjay. Thank you for the kind introduction.
You're very welcome. Now, AJ and all the viewers, we all know right now, the word that we hear either when we're watching a news on TV or even if we are reading a newspaper or article or anything, right? One word circles around us, and it's been going on since last several months, and which is tariff. What exactly, you all know what tariff is, but tariff and the taxes, how are they related? Because tariff has been a one tool which is part of any country's economic growth, because tariff really helps country's economy. But when the tariff is in the excessive percentage where it's really hurting the consumers to buy the products because of high tariffs, then it really makes things very complicated. In a way, the country gets a revenue, but at the same time, the cost of living goes high. It impacts economy also. So today we're going to discuss that subject, and AJ is going to guide us step by step, A to Z, when it comes to taxes and the tariffs. So, AJ, my first question is, what exactly is the role of tariff to the policy?
Absolutely, Sanjeevji. So we'll be explaining what tariff is and how the tariff works, what the tariffs are for various countries. Then we'll look at the whole situation from the tax angle. We'll look at the tariff situation from tax perspective. And then we will remind our viewers, of course, that 15th October is the tax deadline for your personal taxes,
Yes.
for the C corporation taxes. If you filed an extension, make sure, please, file your taxes by October 15th. Even if you have just estimated information, even if you don't have the right information, you have the right to amend your taxes for 3 years. So file the best possible tax return. If the need be, you can always amend it. But let's come back to tariff. When we say tariff is a surcharge. It's a tax that's levied upon imported items. So when the U.S. government, as a country, imports certain items from a foreign country, and let's take an example of India. Now we are talking about 50% tariff from India. So all the crackers, the biscuits, namkeen, rice, basmati rice, all that comes from India. So if you are buying basmati rice for, let's say, $1 a pound, it's going to be $1.50 a pound, because people who are importing the rice, they have to pay 50% tax to the US government. So why would the government want to do it? Mainly for 3 reasons. First, government wants to make sure the import is not happening. People should be using the local product, not the foreign product. Second, generally, we want to create more revenue and a source of revenue, another source of revenue where the government funding can happen. So this funding can be used to lower the taxes, to create more roads, to create more infrastructure. And the third section that typically we use tariff for is to balance the import-export. In case of US government, we have a lot more import than what we have in export with most countries. So not only tariff, if implemented right, can create another source of revenue, can increase homegrown products, and also it can balance or it can help to a certain extent in balancing the import export a gap that we have with many countries. So moving on to how tariff works now. Let's say tomorrow this basmati rice is not $1.50, but it is $1.50. Who is actually paying for the tariff? The problem is the consumer end up paying for the tariff. It's not the business. Business who is buying in this example, basmati rice for $1, if tomorrow they have to pay $1.50, they are going to pass this cost to the consumer, to the end user. Businesses cannot afford to pay 50% extra. There is not enough margin to absorb 50%. So ultimately, if the tariff was 5%, it would not have impacted the economy as much. But when we increase the tariff to an extent of 50%, 100%, then everything in the economy becomes expensive. Food becomes expensive. Now people have limited income. So when food becomes expensive, they can't afford. So the minimum wage that used to be $15.50 has to be increased. When the minimum wage increases, because people cannot afford the food, then the payroll cost increases for all the businesses. When the payroll cost increases for all the businesses, they have to increase the price. So it becomes a ripple effect. It's not just, it does not end with food price increase. Everybody will start charging more money, and it creates a situation when the poor people gets even poorer. Richer people, and richer, let's say top 1%, those people will get even richer because they can use this as an opportunity. Take an example. If somebody is sitting on large inventory, make it the food inventory, gold inventory, jewelers, when the price increases by 20%, 30%, 40%, they are not buying this inventory now, they are sitting on this inventory. But now they can sell this inventory at a higher price. So the richer people, the rich people will get even richer, make a lot of money. The poor people get the burnt, they are paying the tariff, and the benefit that they were expecting. See, the promise was this tariff will be used to create infrastructure. This tariff will be used to lower your taxes. But that has not happened yet. President Trump promised the corporate tax rate will be reduced from 21% to 15%. We'll eliminate IRS. There wouldn't be an income tax. We'll have ERS, external revenue source. No IRS, no internal revenue service. But that has not happened yet. That can take months, years to happen. Until that time, you have the IRS, you have the higher income tax, you have the higher corporate tax, and you have tariff on top of it. So it becomes a double whammy for a lot of people, especially in the lower income tax bracket. Tariffs can create a bigger problem than more richer people.
Well, it has created bigger problem. AJ, after listening to you in your opening remarks about tariffs, obviously some questions come to our mind, and we would like you to clarify those questions. And our viewers may have come to know a lot more about tariff, but let's just talk about basic stuff. So any viewer, hypothetically speaking, anyone can understand what exactly we are discussing here. According to Penn Wharton study, first of all, they say that President Donald Trump's plan on this tariff will add $5.2 trillion in the country's treasury over 10 years. Okay, so that's one thing. Now, our federal deficit is $3.9 trillion, something like that. Now, you mentioned, you said that everything goes up, including the minimum wages and payroll and everything. Not to forget, CPI, Consumer Price Index goes up, inflation goes up, interest rate goes up. So, all in all, a regular consumer is going to suffer. You say corporate, if somebody has $1 million inventory 3 months ago, and now the inventory is valued at $5 million, of course he's benefiting. He's paying the same amount of taxes, or they have some loopholes where they can save the money on the taxes, right? So they are okay. It's the end consumer who's going to be feeling the heat, and everyone is feeling the heat right now. So my question to you is that, when you say the taxes should have been lower, taxes have not been lowered. Yes, maybe there are some deductions here and there that President Donald Trump introduced in his big, beautiful bill. All right, but it really does not offset the tariff cost, because every day you're going to need food items, every day you're going to need clothing items and essential items that you need to live on, right? Even tariff has gone to some of the automobiles that comes to in our country from different countries overall. So this has done. My question to you, number, is that President Donald Trump imposed this tariff on certain countries. It's out of rage and out of anger, or to satisfy his ego. Is it really permanent, or any president who comes in after that can change the policies?
Well, I believe any president can come and change the policy, prior policies. We have seen it happening earlier. I do want to state that the current tariff has been challenged in the court. We are expecting another hearing from the Supreme Court in November.
Oh, good.
That can change the tariff situation. New government, whenever the new government comes in, they can always change the tariff. And I wouldn't really say it's about ego. I wouldn't really say President Trump is doing it to punish anybody. The way I see it, President Trump is doing the right thing in his own mind. The way I justify the stand, the modus operandi has been you increase the tariff by absurd amount of money, 100%, then both countries sit together and agree on 25%. And that's how President Trump is seeing it as a win-win. Take an example. If you go out and tell any country, Japan, hey, your tariff is 15% now, they wouldn't appreciate it. They will not like it. They will give you a hard time. Take another stand, another example. Hey, your tariff is 50%. No, it's absurd. You're crazy. Okay, let's talk about it. How about 25%? No. How about 20? You agree on 15. Now, Japan is happy at 15%. US government is happy. I don't see this as done out of ego or out of ignorance.
Then no, out of ego. The reason I say out of ego, because for certain countries he didn't have to impose. Listen, for example, India, 25% tariff. I can understand that. What was the reason to add extra 25%? He mentioned that reason. We're not going to get into it because it's not a political show. It's a tax talk, right? Additional 25% only in India was unnecessary, uncalled for. Now, before we go into the break, I just want to mention one thing. President Donald Trump, during his campaign, he promised that once he becomes president, he will lower the cost of living. He will bring down the prices of milk and grocery items, because if you remember, in the previous administration under the President Joe Biden, things were very expensive. Interest rates were high. Inflation was high. Fed could not cut down interest rate, not even at 25 basis points. Last 2 years been very, very difficult. And President Donald Trump promised middle-class Americans that I am going to reduce the prices. Your grocery is going to be cheaper, milk is going to be cheaper, rice is going to be cheaper, eggs is going to be cheaper. It didn't happen, AJ. And that's why I said somewhere along, unnecessarily, uncalled for reason comes in. If that reason, if I say your ego and you say no ego, whatever it is, it's okay, but it's unnecessary, uncalled for. With that note, let's go and take a break. And when we come back, we're going to continue this conversation, tariff along with taxes in a country's economy. We'll be right back. Stay with us. Welcome back to the second half of the Tax Talk with AJ. The weekly show brings you all the latest that you really need to know about taxes and taxes related matters. Before I go any further, viewers, want to remind you in my powerful voice, October 15th is the tax deadline. After that, there is no more tax deadline. If you have filed an extension, hopefully you did, then make sure whatever the taxes you need to pay, whatever it is, just file it by October 15th, send the payment. If not, then talk to IRS. They will set you up with the installment plan. But October 15th is the last date. So do remember that. And if you have any question, need some clarity or something like that, or need assistance, this is the time you should be calling Science CPA Services, 908-888-8900, 908-888-8900, or visit sciencecpaservices.com. Book an appointment and ask them that you want to see Mr. A.J. Kumar. Immediately, your phone will be answered, your meeting will be scheduled, your problem will be solved, because I say so. All right, the show is brought to you by Science CPA Services, but this part of the segment is proudly sponsored by one of the oldest and one of the best showrooms on Oak Tree Road. When I say showroom, it's a gold, silver, diamond, platinum showroom, and that's a Suhag Jewelers. Suhag Jewelers is known for their competitive prices. Suhag Jewelers is known for their beautiful customer service. Suhag Jewelers is known for their quality gold, silver, diamond, platinum jewelry that they have, and each piece is backed up with authentic certificate. So we thank Suhag Jewelers for sponsoring this segment. You can visit suhagjewelers.com or definitely stop by at their showroom on Oak Tree Road in Islin. With that note, Mr. AJ will share with us the gold rate brought to you by Suhag Jewelers.
Absolutely, Sanjeevji. So today the spot rate was $3,980, $39.80. The gold rate continues to increase. Just in the last week's show,
Yep.
we were talking about 3,800. Now it's 3,980, and we are expecting the gold price to continue increasing.
Oh boy, 39.80. But remember, gold investment is always a safe investment. There is never, it's too late to buy. The time is still now, right now, because gold rate will go up. And with the gold rate, I also want to let AJ viewers know that the silver rate is also going up. Silver is
Absolutely.
also becoming expensive. So time for investment to purchase gold, silver, jewelry. Stop by at Suhag Jewelers or visit their website. Thank you, Suhag Jewelers, for sponsoring this segment. Coming back to our topic of the show, tariff and the taxes. Right before the break, as I was asking AJ that, President Donald Trump promised during his campaign that he will lower down the cost. He will lower down the cost of household items, including the gas that we use for our autos and everything. Has it happened? Maybe somewhat. Yes, gas is not that expensive. I can definitely confirm that. But when it comes to everything else, has become expensive. And with the tariff, the other countries where America imports a lot of goods, a lot of essential home goods, it has become really expensive. Now, AJ would like to, add his views to this matter.
No, absolutely, Sanjay. And your observation is 100% right. For the last 2 years, things have been increasing in price. The interest rates were very high. If you recall, last month was the first time over so many months when we saw a 25 basis point reduction in the interest rate. We understand President Trump had a say in that matter. We are expecting interest rates to continue going down in the near future. I understand milk, daily products, food items are expensive right now, but there is a plan in place. Whenever you go through these changes, there is always a phase, a temporary phase. But take a look at OBBA, one big beautiful bill. There are a lot of provisions over there. The total cost of that big bill was $4.5 trillion over the next 10 years. That's a lot of money. That's more than the total deficit we have for the US government. So how do you create this $4.5 trillion of expense? By giving more money back to the community, by giving more money back to the general population. Take an example. SALT deduction used to be 10,000. It became 40,000 now, if you are making less than $500,000. If standard deduction have been increased, gift deduction, estate deduction has been increased. A lot of incentives, including 179 depreciation deduction, bonus depreciation deductions have been given to small businesses. There are talks, it's not final yet, there are talks about reducing the corporate taxes from 21% to 15%. So when they reduced the taxes, it creates a deficit. Less money is being received by the government. Somebody has to pay this money. Government is already running in deficit. That's where the tariff comes in. As you rightly said, Sanjeevji, these tariffs are expected to increase $5.2 trillion over the next 10 years. Or even if you lose the CPI inflation rate, at least $4.5 trillion. So there is a plan in place. Not everything has been done right. Not everything has been done the way I would want it to be done. But I truly believe that there is a plan in place. It's not done out of just a whim or ego issues. It's done because there is somebody who wants to do it this way.
Let me ask you a question then. All these deductions that you just mentioned as part of OBBBA, one big beautiful bill and everything, right? How many of those deductions really apply to lower middle class families living in a 1 or 2 bedroom apartments and doing a labor job and buying groceries? It's like they're living hand to mouth, meaning paycheck to paycheck, and buying groceries and taking care of the kids. None of the deductions would apply. They don't know about salt, and they don't know about corporate taxes, and they don't know nothing. All they get, whatever standard deduction they get, that's it. But they are the ones who are putting money into the economy and buying household stuff. Their budget has gone up. It is a fact that they came up with this number that this would cost approximately $2,000 extra per family per year with this increase in tariff.
Well, that's a statistics that depends on how you look at it. Another article that we saw, and we have a YouTube video. Please go to Sai CPA Services YouTube channel. We have a video over there that explains to you who is actually benefited with this OBBA. The way we see it, a lot of these benefits phases out. Say, for example, senior deduction, $6,000 additional deduction that senior people can have if you are over a certain age. But that phases out if you are making more than $150,000. Donation, there are a lot of these benefits, say SALT, phases out if you are making more than $500,000 married filing jointly. The idea is, say, tips. Over time, there are a lot of benefits that are getting phased out if you are making more than a certain amount of money. What it means is, if you are making lesser money, and lesser is defined as in most cases $150,000 per person or $300,000 per family. If you are making lesser money than that, you are getting an extra benefit. So the bill is actually helping you. Who else is helping? If you are serious rich, corporations, shareholders of these large corporations, then you have Section 179, bonus depreciation. There are a lot of other benefits. So the idea was that middle population, people who are well-to-do or rich enough to afford a lot of these things but not super rich, those are the people who will end up paying more taxes. The bill is helping the very poor people and very rich people. But the middle generation, middle sector may end up paying a little bit more taxes than not.
All right, okay. Let's say, obviously the counter argument can continue and continue. I want to look at a different angle right now. When the tariff was imposed on some countries, what if those countries or some of the countries in that group would say, all right, Mr. USA, if you're going to put 50% tariff on my product coming to USA, I'm also going to put 50% tariff on your product coming to my country. What would that happen? Wouldn't that hurt our country's economy, USA's economy?
It can, and that's why you have to balance it out. But the good thing or the bad thing is, US is running a trade deficit with most countries. What it means is we have larger import
correct.
than
export. Yes.
So you can put tariff on 50%, but my export is only $100. My import is $1,000. In that case, if I get 10% is more than if you get 100% from me. So in that case, 50-50, even though it sounds equal, but it's not equitable, meaning just because my import is much higher than the export, even with 50%, I'm a winner.
In a higher category, let's say USA is number one in technology. USA makes great automobiles, and their automobiles are very well received in other countries, right? So when their automobile gets expensive, then they're not going to buy, and then obviously US companies, Ford, Chrysler, GM, they're going to suffer. They're going to say, guys, we're not getting orders, even for Boeing for that matter, whatever it is. So in a way, that tariff has to be in a sensible way. If you are putting a tariff, then give middle class, lower middle class a break, that they can really use it, that they can save the money, and they don't feel the pinch in their pocket when they go out to buy household groceries and the regular stuff.
I think that was the intent.
Yes.
It has not been implemented effectively.
Correct. That's
but the
exactly what I want to say.
But the intent was there.
Yes.
And not everybody is getting the right benefit.
Yep.
And there will be a lot of people who will see the pinch. And again, it's not as straightforward. We talk about US having the right technology, but who is creating this technology? People like me and you. Brown people are creating this technology. Then you bring in the H1 angle. Then you bring in the immigration angle into it. It creates a situation. Then who are you firing? Who do you want here? What do you want? It creates a lot of noise around it.
That we can discuss. That we can discuss in our next week's episode, part 2, where we can highlight the immigration part. Illegal immigrants, immigrants who are legally here, and then H1B, what kind of restrictions are coming and everything. That definitely we can cover in the second part.
And we can talk about the tax compliance for each type of segment.
Yeah, let's
people
do that
who are
next
here on
week.
certain visas, and people who are green card and US citizen, and the tax compliance that they need to be considering.
All right. With that note, we come to an end. But before that, I want to ask AJ one question. AJ, whatever the policies President Donald Trump has put on when it comes to tariff on certain countries, whatever the percentage is, 10 to 15 to 25 to 50, you think that is going to last a year or two?
I hope not.
Uh-huh,
I
me
don't
too.
know if
Me
it's going
too.
to
I don't
last
think it's
or
gonna
not.
last. Yeah.
I sincerely hope not. But who am I to say if it's going to last or not? There is a lot of friction around it. There is a lot of pushback around it. I hope this situation gets sorted out sooner than later.
I think, in my opinion, next year, next November, is a big election, midterm election, what they call it, 2026, right? The voters in America will vote, will give their view, and then you will see the change coming up. So maybe a year and a half, we may have to feel the pinch, but I believe this will be all reversed, and I really hope so. AJ, thank you so very much for your time.
Thank you.
All right, folks, Tax Talk with AJ, we come to an end of it, and second part, I was going to say tomorrow, but not tomorrow, next week, we're going to look into immigration angle. Thank you so very much for watching the Tax Talk. Until we meet again, same place, same time, I am Sanjeev Pandya, wishing you all happy tax-free days ahead, but think about tariff and just stay calm. All right? Thank you.
Thank you.